So thank you very much for coming. I'm Kathleen McGinn, and some people have already asked me, given what you study, why are you moderating this panel? And I have two answers. So for those of you who don't know, I study gender and work. And at two levels, so gender and work around high potential women in professional service firms, law firms, consulting firms, and gender and work at sub-poverty levels in India and Zambia and Kenya, just starting some work in Mexico. And the reason I study gender and work is because of the incredible potential that's being wasted. And so one of the reasons why I'm interested in this panel is that once we have money, there's incredible potential with what we can do with that money. So with economic empowerment and with wealth comes a set of opportunities that we can start to take advantage of in ways that people before us have not. So that's one of the reasons. The honestly more powerful reason is because I got to invite the panel. So having the opportunity to work with these panelists was something that I didn't want to pass up. So I was very, very happy that all of them said yes, that they were willing to join us. And many of you know some of the panelists, and they're going to introduce themselves, but give me 2 seconds to say why I think each one of them is so amazing. So one of the reasons that socially responsible investing matters is that we can do so much more with our money than we can with just our individual jobs. But for every sort of rule like that, there's an exception. And somehow Nancy Berry has managed to be the exception in this and done an incredible life's worth of work that no one person should be able to do. So Nancy started out at Stanford in economics, came here to HBS, which many of you have, went from here to World Bank, went from World Bank to start Women's World Banking, went from Women's World Banking to her new venture that I'll let her tell you about. But one of the, I think, most powerful things about Nancy and the work that she's done throughout her whole life is that she thinks like an economist. She absolutely 100% believes that the solution to poverty lies in profit, and has for years been pushing us here at HBS and the Social Enterprise Initiative, which she's been involved in, to think much more deeply about enterprise solutions as opposed to sort of what you might think of as sort of charity solutions to poverty. So she's made incredible changes in the world through the work she's done, and has made it possible to have other people invest their money in socially responsible ways. So thank you very much for being here. This is my first chance to meet Lisa Hall, so I was very happy that she said yes. She's the president and CEO of the Calvert Foundation. She's also one of our grads and has JP Morgan, right? Years and years of background in the financial sector and real estate sector, and has now taken that to investing at a community level, and so really brings a nice counter perspective to the way that Nancy thinks about investing, and so these two will be a good sort of 1-2 for one another. Steve Lydenberg is so generous. This is the second panel he's agreed to be on with me in the last 2 months, and I'm very, very grateful. He is very active here at Harvard, although he managed to get his degree someplace else at some schools that start with C at Cornell and Columbia. And he came to us. He's been author of many, many articles on socially responsible investing. He's written books on socially responsible investing. He's very, very good at good names for books on socially responsible investing, which is some creativity there. And he has started an investment center at the Hauser Center here at the university. The way I got to know him, even though he was here in my backyard and I didn't know that, is because he directs development for the Domini funds. So Amy Domini was one of the sort of founders of social responsible investing, and Steve is working with them to be ever more creative about the ways in which funds can be used for social responsibility around the world. And Donella, Rapier, and I have known each other for quite a while. I've been very lucky to know her. So I first met Donella because she was the CFO here at HBS. And she is one of our grads as well. Donella has done a number of amazing things, but where I've gotten to see her in action, she was the WSA faculty chair, the advisory chair. I was a faculty chair. When the WSA really sort of started to take on HBS, and this was sort of 2007, 2008, 2009, when the WSA was saying, you know, it's not okay to have the amount of disparity in grades and experience that men and women have at HBS. And while I think the administration gets an amazing amount of credit for putting together this event, I think the WSA gets the credit for really starting what I think of as a movement here at HBS. And Donella was very, very critical to that. In her spare time, she was the CFO of Partners in Health and is now at Accion. So I've asked each of them to do a couple things. First, to take 5 minutes or so and to talk about their understanding of their career, what they're doing, give a little bit more of introduction of themselves. And then we'll leave the rest of the time really for Q&A so that they can share their wisdom with you and you can share your point of view with all of us as well. So why don't we sort of do the standard start here and move on. So Nancy.
Great. Thank you, Kathleen. It's great to be with all of you. And when I was at HBS, and since I have a reputation for shaking things up, so I'm going to try to play that role. I think a lot of people, when they think of socially responsible investment, especially to emerging markets, use the analogy of a container, the development of the container industry. So the function of a fund that is trying to invest in social enterprise is to package a lot of money from institutions or individuals and then stick it in a container and ship it to Africa, Asia, Latin America, to microfinance institutions or to social enterprises. I think that, as Tom Friedman had said, the world is flat. I'd also like to say the world has changed. There's a lot of money in emerging markets, and in my experience, the key, if you want to think about socially responsible investment as mobilizing capital to change the world, it's going to be much more about building and backing domestic institutions, building and backing domestic capital markets, by which I mean savings mobilization, bond issues, local equity, local lending. And it's going to be much more about finding structures that do not look and feel like not-for-profits. As you know, there's a big move called social enterprise, which is for-profit institutions, but many of them, in my experience, retain a mentality of an NGO. And by that mentality, I mean they may have good intentions, but they do not have the business acumen, the capacity to build business models, products, distribution channels to achieve substantial scale. And so what we find is that in the world of socially responsible investment, as lots of energy has been created from the microfinance movement, and now this kind of money is looking for new types of investments, they're finding, as we did in microfinance, that basically a couple hundred institutions represent over 80% of all lending. So there has been huge consolidation. And particularly in social enterprise, and by that I mean health, education, alternative energy, housing, the finding is that the pipeline is very, very tiny, embarrassingly tiny. So you have too much money chasing too few deals by people that are very remote from being able to identify what startup is actually going to be a winner. So when I think about socially responsible investing and I think about women's rural banking, I think our biggest impact was, first of all, to move from 20,000 clients to 23 million clients. And that meant that we had tremendous clout. That represents about $12 billion in 2006. And then to use that clout to mobilize commercial banks for what's now called inclusive finance. And that means not just making baby loans, but looking at the needs of poor women and men as a much richer set of asset and income-building things, meaning savings, micro-pensions, insurance, payments, as well as loans. Secondly, we use that clout to actually beat up on the funds. So there were at one point 100 funds that wanted to invest in microfinance institutions. So we pulled together at Goldman Sachs with my friend Suzanne Nora Johnson, who was at that time the vice chair of Goldman, 35 of the top members of our network, which represented 35 of maybe 90 investable institutions at the time in the world, and all of the funds, as well as Moody, Fitch, Standard & Poor. And in that meeting, we got Blue Orchard to cry, I'm very happy to say, because these guys are used to the microfinance institutions like begging, but the Women's Rural Banking affiliates, mainly women-led organizations, said, we are not going to take your foreign currency loans. It is too risky for small institutions to manage foreign currency. And the guy said, you have to take my money so I can build my fund so that then in 10 years I can offer you better terms. And they said, would you ask Donald Trump to do that? And sure enough, Blue Orchard and many of the other funds developed local currency facilities. And then, we actually impacted financial sector policies of whole countries so that it became more profitable for the banks as well as MFIs to do financial services. So as you may have heard, microfinance has the bloom is off the rose. It used to be the panacea. The issues have been, it was oversold. Some of the institutions got into what I call the hyper-commercialization mode, where they took money from hedge funds and people that were absolutely not interested in how do you serve low-income women or men, and made the institutions even narrower, so that if you say women need savings, credit, insurance, they were pushed into just making more and more baby loans. So for example, SKS in India, they were growing at 100,000 new clients a week. I mean, there are very few companies that can say that. But then the whole industry imploded, partly because they got so distanced from their clients. So what do we learn when we think about socially responsible investment in a broader sphere? The first thing, I think, in addition to think local, think about investing in domestic funds that actually have people on the ground that know who is who in terms of winners and losers. I think the other thing is think outside of the box when you think about socially responsible investment. If you look at Accion, which is one of the early pioneers in this, they have moved heavily into agribusiness. These agribusinesses that do hybrid seeds in Kenya do not see themselves as social enterprises, but they are providing inputs that can double the income of farmers. So in my most recent life, I had Enterprise Solutions to Poverty. We work with 150 leading companies and banks in India, China, Mexico, Colombia, and Kenya we don't even talk to the CSR people. And it's all about how do you tilt the business model in the direction so that you are making a profit while creating shared value with millions of farmers and transforming Indian agriculture. Or I'm on the board of China Mobile, getting China Mobile to use its million agents to provide mobile financial services to hundreds of millions of rural Chinese. So the beauty of this, when you work with leading companies and banks, they actually do not need external money. These are investments that are not that big for billion-dollar companies, but sometimes they need things like a push to see that you can actually do well by doing good. So I believe that we as women at HBS and beyond have a huge role as change agents to actually take on Wall Street, to move into a world where we are looking at somewhat longer term returns, and that we actually are creating shared value and using the large structures that exist to solve things like poverty. Thank you.
Thanks, Nancy. Lisa?
Wow, what a wonderful segue, because at Calvert Foundation, we believe that we are helping to lead a movement. and really trying to transform how capital markets work in new and different ways. So before I talk about our work at Calvert Foundation, I want to talk about this term that we use, socially responsible investing, because I guess that if I were to ask, with the exception of maybe Baki, who I know from a former life, if I were to ask, even one group at a table, what's your definition of social responsible investing? I not only would get 4 different answers, but I wouldn't begin to guess how you would describe it, because it has so many ways that people define social responsible investing. Calvert Foundation is a public charity that was started by the same people who launched Calvert mutual funds more than 35 years ago. And they were one of the first, along with Domini, one of the first mutual funds that had funds dedicated to social investing. And at the time, social investing was thought of very narrowly as investing where there was some type of, in those days, negative screen. So where you were screening out publicly traded stocks and bonds from your portfolio, like tobacco and alcohol. There was a movement that many people will remember or have heard of, at least if you're from a younger generation, where there was disinvestment in South Africa. And Calvert Mutual Funds was very proud to be one of the first mutual funds to disinvest from South Africa during apartheid, and then one of the first to go back in when apartheid ended. And so over time, socially responsible investing really came to include positive screening as well, not just negative screening out of publicly traded stocks and bonds, but also looking affirmatively at how do you screen for positive social behaviors, environmental behaviors, governance behaviors. And in recent history, Calvert Investments has been quite active in promoting gender equity on boards, in a governance with a focus on governance and using their shareholder advocacy power and influence to make changes at the corporate board level. But the work we do at Calvert Foundation is a subset of social responsible investing. And many times the work that we're doing, where we're investing in private debt and private equity opportunities, that it's called impact investing. For years we called it community investing. There are some people who would say that what we do is actually different than socially responsible investing. At the Calvert family, we believe that it's all part of the same very big tent. And that it's a quite inclusive term, that even the term itself is shifting now, where many people who operate in the socially responsible investing sector refer to it as sustainable and responsible investing. They kept the SRI. They didn't want to have to change the acronym. But you will hear now this new term emerging around sustainable investing, which again encompasses all these aspects of social, environmental, and governance for investing money. But I started by saying that I really do believe there's a movement underfoot and that we're actually living through a paradigm shift. And we see it at Calvert Foundation every day, where people want to align their money with their values, right? They want to invest in causes that they care about, and not just through philanthropy, but thinking much more expansively about how money can have influence, how individuals can be change agents. And I think this is a particular issue for women. We did a research project funded by Rockefeller Foundation last year called Gateways to Impact. And there were just some fascinating results in there about women and how women are investing their money. And as we all know, demographically, women are living a lot longer. And so in many cases, we're outliving husbands and other family members who historically have controlled wealth in their families. And so what's happening is that wealth is ending up with the women, and they invest very differently than men. They think differently about where they want their money invested in stocks and bonds, but also about investing in things like microfinance, which we have a large portfolio at Calvert Foundation of microfinance investments. And so we make it possible for anyone who wants to be an impact investor to be an impact investor. We sell a product called the Community Investment Note, which is available through broker-dealer channels. I like to describe it as you can walk into a Schwab storefront and say, I would like to buy a community investment note, and they can sell it to you. For those of you who work in finance, it has a CUSIP. You can pull it up on Bloomberg. And then we take the capital that we raise by selling that note, and we invest it in microfinance. Women's World Banking, which Nancy founded. I feel like I'll use the term dean, that I'm sitting next to one of the deans of this sector because—
I did not found it, by the way.
Well,
Just for the record.
help to bring it to prominence. Is that a better way to describe
that
it?
might
Yes.
be okay.
Really made a difference in microfinance, which mostly serves and benefits women. And what we've done at Calvert Foundation is created something called the Women Investing in Women Initiative, which enables women to target their dollars to support women's economic empowerment, not only abroad through things like microfinance, but also here in the U.S. to support things like housing that's focused on women and transitional housing for previously homeless individuals, health centers, a whole spectrum of investments that really support communities and that have not just a financial return, but a social return as well. And we do have a financial return. For 17 years, we have returned an interest rate to all of our investors, and we also have a 100% repayment rate to those investors that their money matured and they wanted to repay instead of to reinvest. And so 0% loss over a 17-year period to all of our investors, both individuals and institutional. And we're now at a little under 7,000 individuals. We're very proud of that number, but it's just a drop in the bucket. And we believe that number can be tens of thousands of individuals who are taking their investment dollars and really using it in a way where they're demonstrating the power in the purse, and they are influencing and being agents of real social change through their money beyond philanthropy. So I'll stop there, but I'm looking forward to the Q&A and what questions people have. Thanks.
Well, thank you. I'm delighted to be here. I consider it a privilege to be included in this group. And I view myself here as representing Amy Domini, with whom I have worked since 1990, and would like to convey to you a little bit about Amy. I've had the privilege of working actually with three women who have been instrumental in the development of social investing over the years. Alice Tepper Marlin, who founded the Council on Economic Priorities and now is with Social Accountability International, and Joan Bavaria, who founded what is now Trillium Asset Management. And women have indeed played a crucial role in the development of responsible investing over the years. And Amy was a pioneer, started as a broker back in the 1980s and had clients that were, 1970s actually, and 80s, had clients that were interested in responsible investment, and just has made it her career. She's been recognized. I was a little surprised when Time magazine included her as one of the 100 most influential individuals in the world in 2005. Not that I don't think that she's influential, but it seemed to be a bit of an overstatement. But I think what it represented really was the gradual acceptance of social responsibility, which had been, as Lisa indicated, really viewed with a lot of suspicion back in the 70s and 80s, as it gradually has become accepted more in the institutional investment world. And Amy's role in doing that, she had really been a tireless supporter of and advocate of responsible investment. And in founding the predecessors that have become Domini Social Investments, I think she made two major contributions. One is realizing that to be a legitimate movement within the mainstream financial community, it needed a benchmark like the S&P 500 or the Dow Jones Industrials. And her idea of creating the Domini Social Index, which was created back in 1990, really proved to be a important tool in answering the question of whether or not there's a cost to social investment, and proved to be a way of measuring social investment versus mainstream finance for over the first 10 years. Dow Jones and FTSE, the London Stock Exchange, now have similar indexes. About 10 years afterwards, they have created their own. The second contribution was understanding that systematic research on the social and environmental records of publicly traded companies was an important aspect of legitimizing the field, and again, what is now a part of MSCI was the first of the research firms to systematically analyze the records of publicly traded companies. So the mutual fund company that is now Domini Investments was founded back in 1990, and it really reflects a fundamental belief that all investment has social and environmental implications, and that at a certain point, the implications of that, the impacts of that, require action of some sort or another, that a responsible investor is one that recognizes that there are, in addition to financial implications, social and environmental implications. And there are two kinds of actions that Domini, which invests in a publicly traded companies, so large companies, publicly traded companies. One can be described as voice and the other as exit. I think that's strong vocabulary that has come out of Albert Hirschman has a great book called Exit, Voice, and Loyalty, which I think really captures a lot of the dynamics of what responsible investment is about. And loyalty is part of it. If you were invested in a company and they start going down a path that we're not happy with, we believe in talking with the company and discussing it and trying to see if we can engage with them. An example of that would be our work with Gap, which had problems with its overseas vendors. In part of dialogue with them, Gap not only began disclosing its policies, but actually the vendors that it worked with, and really set a whole standard for the industry. We started work with Yahoo after its controversies with censorship in China. It resulted in the creation of a whole industry NGO partnership called the Global Network Initiative that deals with software companies and censorship issues. The other type of issue is when voice doesn't work, is exit, which you basically leave the company, sell the company. And the South Africa divestment movement was a good example of that. And those are all often cases where the company, there is really, to address the fundamental issues that are at stake, it's not sufficient to ask the company to change. Either the company by nature can't change, or the industry is so fundamentally involved with the issue it can't change. So South Africa divestment was really about the dismantling of the apartheid system, not improving companies' behavior in South Africa. We were, for a long time, have had a ban on firearms company. It's essentially a political issue. It's not reforming the firearms companies to have better behavior, and that was brought home. Amy actually not only grew up in Newtown, but she went to Sandy Hook. So it was brought home to us, and we've spoken out quite strongly on that issue. So in our view, responsible investment really is the way investment should be done, recognizing social and environmental implications, and we hope that Domini can be an example for influencing all of the public markets in that way.
Thank you. Donella?
Great, thank you. So I have been with Accion for just over a year. As Kathleen mentioned, I was with Partners in Health, Dr. Paul Farmer's organization that's focused on healthcare in the developing world for the 5 years prior to that, and would probably still be there if Accion hadn't been quite so relentless in trying to recruit me away from there. And I was really attracted by the notion of this being a business solution to poverty as opposed to pure philanthropy, because like my colleagues here, the belief of harnessing private capital for social change, I think, is a really incredibly powerful notion, because all of the philanthropy in the world will not move the dial as much as it needs to be with the challenges that we're facing. So Accion is a global not-for-profit. We are dedicated to building a financially inclusive world where every adult has access to a full range of financial services, including credit to start or build their businesses, a safe place to save, insurance, and we have a microfinance network. Over the last 50 years, we've helped to build 63 microfinance institutions in 32 different countries. So we've primarily known for microfinance, but more recently we've been, the second thread of our strategy is on pushing the boundaries beyond microfinance. So we have two impact investing funds, one that's called Frontier Investment Group, which is a post-revenue impact investment fund that is really looking at companies that have already proven concepts but need an infusion of capital to get to the next level. And then our venture lab, which is even earlier stage, which are very no proof of concept, essentially proof of concept, the kind of after the angel investing period, but before most organizations would be willing to invest. So those are our two impact investing initiatives. They're inside this not-for-profit, we are a very unusual organization. We are actually primarily an investor, even though we are a not-for-profit. And let me just give you a couple of examples of some of the types of investments that we've made. So one would be, it's called Vindya. It's in India, and it's a business process outsourcing organization for microfinance institutions. As most people will probably know, in India there's a high level of disabled people. So what Vindya does is, instead of looking at people and saying, oh, you don't have a right arm, so you can't do this job, they say, oh, you have a left arm. Let's hire you and see what you can do with that. So basically 90% of the people in the organization have some sort of physical disability, and they've designed the entire organization around this. So there are railings all around so they can pull themselves around in their wheelchairs, a very open space in the middle, because some people who scoot around on their on the ground because their legs aren't working. So it's all built around them. They have very, very low turnover, as you might imagine, and so they're able to actually compete with the other business process outsourcing companies on price just the same because of the lower turnover. So that's one of our really great investments. Another one is called All Life, which is it's an insurance company, health insurance company in South Africa that is among the first to offer health insurance to people living with AIDS. So the interesting about this one is that once people started getting insurance, it changed how they feel about themselves. So there's often a difficulty getting people to adhere to taking their drugs, but by getting this health insurance, suddenly they feel worth something. So now they're actually taking better care of themselves, so it has some really great social impact. And then the third one, I'll tell you about the last one. You'll think this is kind of creepy, and it is, but it feels a little like Big Brother. But it's actually not that different from what happens today. So a lot of times people can't get credit because not because they're not creditworthy, but because nobody knows anything about them. So they just don't have a credit history. So what this company does is, using social media, is it goes through and scans everything that's out there in the social media and gives basically a character score. And based on that, it allows the microfinance institutions to actually make many more loans than they might otherwise. It does feel like Big Brother, but as you might imagine, the loan officers are loaning on that character assessment just from the interviews today. So all this is doing is taking a sphere of additional data that's out there and bringing that into the evaluation. So those are a couple of the really interesting kinds of things that are out there. Lots to do on different kinds of payments. Mobile phones is changing the world. It's incredible what you can do with mobile phones these days, and amazing how pretty much everybody has them. So that's just a little bit about Accion.
Thank you very much. I'm going to open it up to all of you with questions, and if you want to direct them toward a specific panelist, go ahead and say so, or with comments or insights you have from your own experience or your own lives. And if you can just say your name when you ask your question. I can't read most of these name tags. Yes?
I have a question, which is...
You want to introduce yourself?
My name is Bhakti Merchandani. I cover a global development organization with Barclays, and I've had the pleasure of working with Lisa and Nancy through various projects, and also Nancy was my boss's boss in my first job in the social sector, so she's a pretty amazing person. None of you addressed this topic, but it's kind of a hot new topic in the impact investing world. What are your thoughts on the many innovations around the timing of aid flows, for example, performance bonds, or kind of securitization of kind of vaccine payments? What's your view on that kind of new and small and experimental aspect of the space?
No idea.
So I'll speak to that a little bit because it's actually been, it's happened a lot in developed countries and in the U.S., this idea that you would finance essentially receivables or, pay for success kind of transaction, which is rewarding people for success that is evidence-based around social impact. And so I'm assuming that that's the kind of thing you're talking about. And so they're often called social impact bonds, sometimes are called pay for success. The folks who invented this out of Europe, the social finance group that's very well known and has launched an effort here actually out of Boston run by a woman HBS grad, Tracy Palagian. He actually says, well, they're not technically bonds, but everybody wants to call them that, so we just let them call them that. But it is this idea of people making investments and then the repayment of that investment depending on success in a particular activity. The one that was launched in Europe that is, the quote, the inventors of the social impact bond concept was around recidivism. So the investor gets repaid if the recipient of the funds actually reduces recidivism or people going back to jail. It's just a fancy way of saying people going back to being incarcerated. If they reduce that rate of recidivism, then the investor gets repaid by the government because it turns out it's a lot cheaper for the government to not put people back in jail, to have them stay out of jail. And so what the government saves by not having more people go back to jail, they pay to the investor. And so this concept is they're looking to try to replicate it around things like education, where the investment up front of investing in education reduces other costs that the government may have to incur over time, looking at it internationally around things like vaccines. So it's a developing area that I think has a lot of promise, and we've been quite supportive of it because we know that you can have investors step up to the table to invest in social impact and connect that to a return. In our case, it's actually a revenue stream and a cash stream that's not associated with the government, but in this case, it's often the government or some type of agency that's reducing their costs through the upfront investment.
Thank you. Another question? This is a very un-HBS-ish group.
Yeah, Robin.
So I just started my career in nonprofits about a year ago after.
You want to tell us who you are?
My name is Corey Mitchell, and I work for a Los Angeles-based nonprofit that does international disaster relief and humanitarian aid called International Medical Corps. And so this concept keeps coming up of shared value. And I have talked to some colleagues of mine in the nonprofit world, and they continue to remain baffled as to how to execute it in good examples. And I was wondering if you folks have seen some great examples of shared value that you think could be scaled into other organizations?
Yeah, I'm actually really happy that you asked that question. One of the things that we're doing is a year ago we launched a platform to create shared value in agribusiness with 20 million farmers by 2020. And we did this with an incredible organization called Jane Irrigation, which is the second largest irrigation company in the world. And so when I'm talking about a new vision of social enterprise, I'm thinking of Jane Irrigation. So this company was started about 20 years ago or more by a poor villager of the male persuasion who was smart enough to make it to university, got offered an elite civil service job in India, came to his mom back to the village and said, do you think I should take this job? And she said, anybody can work for the government. Anybody can actually start a small enterprise and take care of his family. But nobody is worried about the poor farmers of India, and nobody is worried about conserving water, which she already saw in like the 80s as a critical constraint. So why don't you spend the rest of your life solving those two problems? And ironically, the guy actually has proceeded to do that. And so when Nitin was just about 3 weeks on the job, I ended up bringing the chairman of Jane Irrigation and his son, who is the CEO, about 47 years old, to meet with Ray Goldberg, who taught me agribusiness and still teaches, and then Kash Rangan, who runs social enterprise, and Nitin. And Ray, whom I adore, and all of this, we work with a lot of MBA students on with all of these companies. After 15 minutes, said to I call him my chairman, the chairman of Jane, you have just articulated everything I believe better than anyone I have ever met. And Goldberg kind of invented the systems approach, value chains, the whole integrated way of looking not only at agribusiness but at the world. And after an hour, he said to Mr. Jain, you are my brother. So 1 year later, we had Nitin, Kash, and Ray Goldberg in rural India, where we had to helicopter all the 70 CEOs plus them into the headquarters of Jane Irrigation. And Nitin, I believe is an inspired choice by Drew, in spite of his being of the male persuasion. But being Indian, he still didn't really quite get it on inclusive business or shared value. He kind of was slotting it into the CSR category. But he agreed to come because he asked me how many people in the world depend on agriculture. And I was like, I don't know, but at least 1 billion. And so he came, and you could see the light bulbs go off as he saw the transformation of 1 acre farmers with irrigation and banana tissue culture. This company this year will produce 60 million banana tissue cultures, which have a radical productivity enhancing thing. So, but the beauty of this movement is that there are now 60 leading companies that start with Tata, Mahindra, ICICI, HDFC Bank, that are all part of this platform, that have committed in writing to their piece of getting to 20 million farmers by 2020 with a shared value proposition. And we just 2 weeks ago had the second symposium with a lot of stuff happening in between, and this is just kind of a circle of life moment. One of the leaders of women's rural banking, a woman named Jayashree V.S., who created Sewa Bank, which is very famous. It only has 100,000 clients, but it's had a ripple effect on maybe 50 million in the development of the microfinance industry and women's self-help groups. She came to one of our action groups, and she only had to travel an hour in the same state from Ahmedabad to Anand. And the guy chairing the meeting is the head of Amul Dairy, which has 3 million very small farmers that are part of it. And by the end of the meeting, Jayashree had struck a deal with the head of Amul to provide micro pensions to the 3 million families within the Amul dairy system. So that is what I mean by shared value, and that's why as you venture into the world of NGOs, I would just counsel you to think big and out of the box. You know, how do you create something that then could be franchised? How do you create something that then could become public policy? Because in the US, ironically, in the NGO and social enterprise sector, you know, if you look at microfinance, I think Accion is the leader in the US, and they may have 5,000 clients. But most of the NGOs in the US have, at one point, like 10 years ago, there were 10,000 organizations providing microfinance in the US, and they had 10,000 clients. So, you know, you figure out the numbers. So I think we have to think in a different way, and I'm sure you have the capabilities to do that.
Can I also just a quick suggestion? I'm a big fan of Twitter, and as a news source or a source of information, and they actually have a pretty good hashtag on shared value that's very active. So hashtag shared value will generate a bunch of information for you around what's going on in the space.
Yes.
My name's June Thorne. I was class of 2003. And I work with families and foundations managing portfolios. And one of the things that's been so exciting for me in the past 2 years is the number of clients that are talking about this. Clients that I never expected to say that they really wanted portfolios to be aligned with values are bringing it up. So I'm really seeing just, it's not a big data set, it's a small data set, but a real focus on this. What's so interesting now, and I'm more throwing this out to get others' feedback, I mean experts or others in the room, is that the term SRI or sustainable investing, I'm finding is having a negative impact. That it infers that you're giving up return to have value alignment. In fact, there are a number of amazing investment opportunities that we're investing in for clients that have outsized return, have very strong returns, are beating benchmarks, not just social benchmarks, but standard benchmarks, whether it's in fixed income or in equities, and have incredible value alignment. And so the term sustainable investing is almost a negative. No, I don't want that. I want good investments that also have value alignment. Is that just my little data set, or are you seeing that more broadly?
I would say, it would definitely, I mean, I talk to a lot of philanthropists too, and what we find is that people kind of have their philanthropy, their schools, their hospitals, and churches and whatnot, and then they have their investment. And yeah, some of the people think that, like, they turn on the investment side and they say, okay, I need to make, you know, a big return here, and I don't want to do this social impact investing because I'm going to trade off some return, because a lot of them do, I think that they have to, you know, give something up in order to have a positive social impact. And then when they're thinking about their philanthropy, they're not thinking about what they can actually achieve through philanthropy where there's social change. Because, I mean, if you look at it, like, investing is really hard. Social change is really hard. I mean, it's hard to do these things and put them together. Because the one thing that I would underscore, too, is that people shouldn't just throw out the whole idea of philanthropy. Like, our two impact investing funds, like, we may lose it all. We're willing to take those kind of risks. We can, because we're a not-for-profit. While I totally agree with you that there are a lot of really great options for actually, you know, maximizing both financial and social returns, some of us do need to invest in companies where we may just completely fail, because otherwise I don't know that we're going to get the kind of social change that we're after. So it's so I don't know. It's definitely something that I think needs a lot more attention of people thinking about the boundaries of these two things. And I know when you were talking about how you define the social impact investing and responsible investing, because I've looked at a bunch of different definitions, because a lot of them are, I'll trade off some financial return for a social gain, which I think is okay. I think going after making sure you maximize both is also fine. Also, I think people should really think about doing more in their philanthropy. Like the microfinance industry, there's a fantastic report that Monitor did just about a year ago called From Blueprint to Scale. And it underscores the importance of philanthropy and social change, because everybody's all hot about social impact investing, that they're kind of forgetting about philanthropy. And they say that it's about $20 billion of philanthropy went into microfinance to get it to where it is today, where it's now a sustainable kind of an industry. So there's still the need for a lot of that going forward.
Steve, do you want to speak to
Yeah,
this as well?
two quick comments. First, I think your observation is valid, well beyond your personal experience. I think there really is a shift within the investment community, and I think a lot of people would like to do a lot more responsible investment. I think it raises two definitional problems. One, what is a responsible investment? And the other is, what is a responsible investor? And there are a lot more problems in dealing with the question of what's a responsible investment than there are in dealing with what is a responsible investor. And in fact, I think too much attention is being paid to the question of what's a responsible investment and not enough to what's a responsible investor. Anybody can be a responsible investor. Not anything can be a responsible investment. And I think if we spend more time defining what a responsible investor is and what their responsibilities are and how they behave, then that's an avenue toward more systematic change.
Can you tell us what your definition of a responsible investor is?
Yes, I can, and I've spent a long time trying to make it as simple as possible. I think saying things, my ideal is for a simple definition of what a tagline should be is drink Coke. You know, that's just about as simple as you can get.
I thought you were defining
not it.
responsible investment.
That's true.
So, no, it's not, that's not responsible investment. So, responsible investment, I've got it down to 6 words. Know your investment, know the system. I could elaborate on those, but that's about as simple as I can get it.
That's the investor.
That's the responsible investor.
Yes, that's an investor. Know your investment and know the system.
And so this is such a great point. I mean, we're here at a women's conference, right? And how many of you, I bet, I put myself in this category too possibly, have investments in your portfolio, whether it's through a mutual fund or through a family office or through direct investments, where the boards have no women on that? None. None. Why would you put your money into something that is inconsistent with your personal values? And part of it is this responsibility of you got to actually do the homework to figure out, and there's not an easy place to go to see. I mean, there's some campaigns underway that make it easier to see who doesn't have women on their boards. But, you know, that's just like one example, and you can multiply that with all different types of values and things that matter to not just us as women, but us as, you know, human citizens.
So we are
Can I just come back
Yes,
to
please do.
Donella's point? You know, I really agree with your point on the importance of results-oriented philanthropy. And I do think that with the kind of macho social investment, that has been lost a bit. And if I look at where the blanks are, like, for example, in agribusiness among emerging entrepreneurs in India, the gap is really in that very beginning seed capital. And there, if you want to, you have to be prepared to lose. So you might as well call it a grant, I believe, instead of pretending that you know what you're doing in terms of an investment. And I also agree that if you look back, if I look at like the top microfinance institutions in the WWB network, they all started with at least $1 million in de facto grants. I mean, it might have been an IDB loan repayable in 40 years, but de facto grants. But the reality, I didn't know the numbers you gave, but I would guess that of the billions of dollars that have been granted to microfinance institutions, maybe 80% has gone to naught. So even though the biggest institutions 20% represent 80% of the outreach, that has not been the case in terms of the philanthropy dollar. So there was a huge period where everybody thought they could replicate Grameen, and everybody that said that word got a lot of grant money, especially in Africa and certain parts of Asia. And that was a waste. So I think we need to, I like results-oriented philanthropy as well as results-oriented or impact investing. And I think it's important for people in this room that can do both to be sure that you're a responsible investor.
But Nancy, if you take your initial comment, which is if you make it an analogy that it's a seed investment fund, and let's face it, there's huge problems in mega categories of, I'm thinking internationally because that's what I'm doing right now, that, I'm working in the healthcare field now. And, I've been talking to Intel and IBM and all these organizations of basically how they can give their intellectual capital to really support us as an organization. And when and I worked in the venture capital field too, and I think if you took your model of really calling a spade, which is basically, we're going to take 10 different shots at this, 10 different possible solutions that are relatively new, and we're going to sort of create some very rough milestones around each one of those, knowing that maybe only 2 will make it. And if you take that ride with us, knowing, to your point, Steve, that that's a responsible investor, that investor is going to take a ride with you on, let's say in my case, it's, how do you connect multiple parties in South Sudan in the worst conditions, hit mud, and you're trying to treat people. I mean, how do you connect people to deliver health care? How do you create, mobile solutions that will enable the analysis of a huge amount of data where it doesn't exist live because of absence? Whatever, let's say you take 10 different problems and you call it a fund and you call it experimental venture money, and going in that you are maybe got a 20% chance of doing this, but it's still responsible because you're playing the odds, you're playing against big mega solutions that need to be solved, you still have metrics, rough metrics, and the people that are playing in this solution, let's call it IBM, Intel, companies I know who are interested in healthcare, that to me is still a responsible way of thinking about how to marry,
I have been
big corporations
begging
where
the
you're
Harvard Business School Club of New York to take this approach instead of just tossing $50,000 at random NGOs, but there has to be an onus on both the investee, the grantee, and the investor that to get this kind of money, you have got to have a breakthrough business model. And you have got to have thought through your executing strategy, your product superiority, your distribution system, your scaling up strategy. Because I think too often the NGO world is not at all rigorous. And to me, the only rationale for doing anything as an NGO is if you can create a breakthrough innovation that can then either be scaled by you or by others. Otherwise, it's just paying people to have a job to serve 1,000 people and do a little tutoring. I mean, that's just not gonna, big problems require big solutions, and this country has a lot of big problems today.
So one last question, because we are past time, a short question.
I'm Steve Wilkinson. I'm actually some of my nonprofit work, chairman of an organization that enables microfinance lending in California. But I was wondering, we've talked a lot about things that are happening internationally, domestically. What's the trends in various social type programs that are very effective and unique and are not like the ones you just described? Helping a few people and doing some education. Is there anything that?
So in the U.S., what are those sort of hot
domestic
trends to social?
So is there any? Can you shed some light on something?
So
This area
Calvert
is-
Foundation, our portfolio of about $200 million 60% of it is based here in the U.S. So we've invested in affordable housing projects and organizations, as well as these entities that are called community development financial institutions. If you're working in the U.S. on these issues, you probably have heard of CDFIs before. But I think there is tremendous support around the CDFI community, and you're seeing more and more capital raising being focused on them through things like Kiva, which at one point was exclusively international microfinance. MicroPlace used to be exclusively international microfinance. They have now moved to do capital raising for very small amounts where individuals can go online to make investments in U.S.-based organizations. I don't know if Donella also wants to talk, because Accion has a network of U.S.
Yeah, I was going to say
groups.
we just partnered with Kiva in Arkansas around that as well. But yeah, I think there's definitely in the U.S. Microfinance. At least as Nancy said, Accion has the largest U.S. network, and a lot of it is around. A lot of our work is around getting the businesses, helping them. For every 20 that apply, only one gets approved because a lot of them are just not ready. So we do a lot of financial education, a lot of training and whatnot of the potential clients so that more can get access, because it isn't a question so much of capital, because of the all the banks are encouraged to give to these community development financial institutions because they're required to. So they're getting a lot of loan capital, but it's the readiness of the entrepreneurs to be able to, build their credit records, build their businesses. That's really the bottleneck.
And stay tuned, because we're going to be doing something on this around revitalizing American cities. We're launching an initiative that's going to be focused on the U.S. for iconic American cities, where we're going to target longer-term capital than we've done in the past.
And just, I think one trend that you're going to see in the U.S. is an increasing interest on the part of the large institutional investors in applying some kind of responsible investment criteria across all asset classes. So there's a lot of interest in infrastructure at the moment. There's a lot of interest in real estate, and they're wrestling with the questions of what does it mean to be a responsible investment in areas like private equity.
Thank you very, very much to our panelists. I want to reiterate what Nancy said, that big problems take very big solutions, but there's also small steps you can take. Many of you will be buying an IRA in the next couple of weeks. As April 15th comes, you might want to think about which fund you want to put that IRA into. And you can make those very, very big decisions for next year. So thank you very, very much.